I'm Matt Bichar with NAREITWeek.com. I'm here at the Waldorf Astoria Hotel in New York City for REITWeek 2016, NAREIT's Investor Forum. Joining me for this CEO Spotlight is Mark DeCesaris, CEO of WP Carey. Mark, thanks so much for joining us.
Thanks, Matt. I'm glad to be here.
Great. So 4 months on the job. How would you say things are going so far, and how hard is it to reorient your thinking from your previous role as CFO to now CEO?
It's been a busy 4 months. We've completed a previously announced strategic review of our program. We have determined and reaffirmed the value of the current business model going forward, and really developed a business plan that focuses on 6 points: growth, diversification, balance sheet strength and flexibility, operational efficiency, proactive asset management, and transparency of the information we provide. So my time has been devoted to working with the other executive team members to formulate a business plan and really putting that into execution. The average tenure of our senior management team is about 15 years, and I've worked with all of these guys historically. So, I think the one difference is, in my view, in the CEO role, that in addition to working with the executive team and providing guidance on the operational day-to-day business plan and helping them to execute it, part of the CEO's job is really to also continually look at the long-term strategic alternatives available to the company. And I think part of the CEO's job is to really foster an environment where idea flow and strategic planning becomes part of the entire executive team's job every day. This is an idea that Bill Carey fostered over the 35 years he ran the firm, and it's one I look forward to continuing on with.
Now, can you tell us a little bit about your recent deal in the education space, which seems a little outside of the typical WP Carey wheelhouse?
Yeah, well, let me take the second part of your question first. I would argue that it's exactly within the WP Carey wheelhouse. It is a deal where our investment team was able to go in, work with the company, underwrite their business model, get comfortable with their credit, and structure a lease which provided significant shareholder return to our investors. In this particular case, we worked with the company, understood their credit, structured a 25-year lease that provided uncapped CPI bumps over the life of that lease. We looked at assets that have terrific rent coverage, roughly 3 times. And in the same vein, got a corporate guarantee from the parent, which is about a $2.5 billion equity value entity, and a long-term lease of 25 years. So from that aspect, it was exactly the type deal within our wheelhouse. Nord Anglia is probably one of the premier providers of private education. Around the world, they have 35,000 students in grades pre-K through grade 12. This particular deal was for 3 assets located in Florida and Texas. It was a $235 million deal and structured in 2 parts. There'll be a $167 million initial equity injection to purchase the 3 schools, followed on by an additional capital requirement for renovation at the schools, which will provide dormitories, athletic fields, classroom upgrades.
And lastly, what do you see as the biggest story related to WP Carey for investors to follow in the second half of the year?
Execution, I think. As I said to you to begin with your first question, we have developed a business plan focused on 6 key areas: long-term growth, and that will take the form of additional acquisitions on our own balance sheet. We've acquired $385 million in net lease acquisitions since I started roughly 4 months ago. And also additional diversity and growth in our current and future products in our investment management arm. We'll also focus on continued diversification. In the net lease area, we think diversification is a proper way for a net lease portfolio to be structured. We think it helps protect our investors in the case of industry-specific downturns. We'll continue to have diversity in our capital sources and our ability to put that capital to work both in the U.S. and in Europe, where we have assets primarily in Western and Northern Europe going forward. We'll continue to focus on operation efficiency. We have put in place a plan to reduce our G&A structure. We'll continue to look for ways to reduce our cost structure over time and maintain that cost structure as we grow in order to provide scale. And we'll continue to look to maintain an investment-grade balance sheet that we have from both a strength and flexibility standpoint moving forward. The other area where we'll continue to see us focus on is proactive asset management. We have announced, where we expect to dispose of assets in the 650 to 800 million range. That will provide capital for us not only to continue to deliver our balance sheet, but also for future acquisition on our balance sheet. And the last one is increased transparency to our investor community. You'll see us go out and do a significant investor outreach program, as well as provide additional transparency on our business model and our supplemental financial information going forward.
Mark, thank you so much for joining us.
Thanks, Matt. I appreciate it.
For more from REITweek 2016, be sure to visit REIT.com.